Hey, good evening. I'm Dan Fitzpatrick here at StockMarketMentor.com on Tuesday, July 29th. I want to look at Qualcomm today, though it's kind of ugly to look at, but sometimes you got to go ugly and you better go early. Here's the deal. The stock had been in this volatility squeeze for a while, but they announced their earnings, and they weren't that great. That's why the stock did what it did. But the other issue was that they lowered their licensing outlook. And they're having issues basically with collecting royalties over in China. You know, what's funny about those Chinese guys, a lot of times they like to reverse engineer software and they don't kind of like to pay for it. It's a weird thing. I don't know why they do that, but they do. It's a common thing. So nothing against the Chinese, just everything against the Chinese who do that. But anyway, so that's a problem for Qualcomm because that's really where the big growth industry is. So the fact that they're going to be having a tough time getting some revenues over there, whether they're deserved or not, any of that stuff is a problem. China's declaring Qualcomm a monopoly, which actually, who knows, may be the case. But here's the thing. You don't have to have a monopoly on owning this thing. This stock sold off on how many shares? 36 million shares and hit the 200-day moving average. Like within 2 pennies. It fell 2 pennies below what the 200-day moving average was last week. But now the stock's trading lower, and it's trading lower on heavier than average volume. This is a stock that it's not too late to sell. Look at this. I mean, this could be like one of those Thelma and Louise stocks. Grand Canyon. So you don't want to be long this stock if you think it's going to go a lot lower. If you happen to be a true believer in Qualcomm, fine. Keep a stop like underneath 75. If you get stopped out, and you think you shouldn't have, then just decide to buy the stock back when it rises above the 200-day moving average. And it might. It may very well do that. So what happens if that if you get stopped out? Well, you got shaken out. You sold right at the bottom, then you bought when up a couple bucks, and that's okay. If you can't handle getting shaken out once in a while, then you shouldn't be trading. You should be doing something else. But I think selling this stock, even down, I mean, forget that it's down from the high here. It's down, oh my gosh, well, I can't sell down 8% from the high. Well, this hit a high before earnings were released, so this doesn't really matter, does it? What's really most important is the stock gapped down and is now down almost 3% below where it opened up. So there's still selling going on. You need to be one of those guys that's selling, okay? Okay, members, over to the strategy session. I got some cool telecom stuff for you, as well as a few other things that you can be doing right now, and a lot of things that you shouldn't be doing right now.